We are now 3 months into Donald Trump's second term. And as we like to do, right around or just after the 20th of the month, we are going to look at the economic performance of Trump's presidency so far so that we can evaluate. Let's start with the unemployment rate. When Joe Biden left the White House, the unemployment rate was 4.1. We are now 3 months into Trump's presidency, and unemployment is basically unchanged, a little tick up to 4.2%. Not a significant change. The inflation rate, when Biden left, was year over year 2.9% when we include the final full month in office for former President Joe Biden. After 3 months under Trump and some brief increases, we now have the latest number is the year over year period ending in March of 2.4%. Inflation down slightly under Donald Trump. And of course, as is always the case, if inflation is more than zero, it doesn't mean that prices are declining. It just means that prices are increasing more slowly. GDP. We still, of course, having only just finished Q1 of 2024, of 2025 rather, we don't yet have any GDP numbers under Trump. The first quarter of 2025 GDP number is expected, I believe, around mid-May. Expectations are anywhere from nearly zero growth to up to a 3% decline. That's where we are right now. No Trump data yet. Q4 2024 annualized at 2.4% growth. Interest rates. Typically, when we say where are interest rates, we pick one metric to look at, and usually it is the 30-year fixed rate mortgage interest rate. At the end of Joe Biden's term, interest rates were 7.04, now down to 6.83, down about a fifth of a point after 3 months of Donald Trump. Remember that Donald Trump promised interest rates were going to come way down, and we are not seeing that at this point, but you've got to give him credit, down slightly. When it comes to consumer confidence, we have seen that number decline quite a bit. You will see here that consumer confidence was at a 74. This is University of Michigan consumer sentiment, one of the widely accepted metrics for this. 74 at the end of Biden's presidency, now down to 64. This is a relative number based on 100, so down about 1/7, which signals concern about future expectations. Stock market performance. You may recall that in 2023, the stock market on average returned 22%. In 2024, the stock market returned on average 22%. Total growth of the stock market under Joe Biden, 60%. In the 3 months since Donald Trump took over, the S&P 500, this is painful. I hope you're sitting. The S&P 500 down 14%. 14%. And we will discuss how April is looking like it might be the worst April for stocks since 1932. Think about where we were as a country, Great Depression in 1932. So the stock market numbers, a disaster. And then finally, gas prices basically flat. What we saw was a little bit of an increase when Trump took over, a little bit of a decrease, a spike to $3.26 per gallon, now down to around $3.10, $3.12 per gallon. Gas prices basically flat. They love talking about the decline by looking at where they were on April 4th, which was a peak. But the truth is that if you go back to around January 20th, gas prices are basically flat. So what is the story so far? We have two things that we are doing simultaneously. One, we are looking at Trump economic policy and making an analysis of how we believe those policies will affect the economy. The tariffs, which are on again, off again, have not fully kicked in, then they're paused. If the tariffs are fully engaged and really trickle down through the economy, we expect that inflation will go up and GDP will go down. That's the expectation. We don't yet have GDP numbers, and inflation has not yet gone up because a lot of the tariffs started in April. Our latest inflation numbers are for the period February through March. So we just don't have that data yet. A lot of indicators are flat. Unemployment's basically flat. Gas prices basically flat. The big one is the stock market, which is a futures market. It's when the stock market declines, it's often about expectations about the future. And the S&P 500, it's painful to say it. I don't log into my mutual fund accounts anymore because I don't want to see the brutality. Down 14% is the S&P 500 since Donald Trump took over. So that's where we are. I promised you we would coldly and objectively look at the numbers. Those are the numbers. And as always, if there's an additional metric you want me to include, for example, I didn't used to do gas prices, but people wrote in saying, since Trump made a lot of promises about gas prices, you should include them. If there's another metric you want me to include, let me know. And of course, remember that you can get the daily briefings through our newsletter by signing up at davidpakman.com, by emailing info@davidpakman.com and saying, get me on that newsletter, David. We will do it gladly. That's my promise to you. After researching, writing, refining, The Echo Machine, my book, is finally out. This is not just a book about how American politics got so broken. It's also about what's happening right now and what we can still do to stop things from getting worse. Trump's been back in power. The results have been even more catastrophic than many feared, with targeting of political opponents and gutting democratic institutions, laying the groundwork to even further consolidate power. But the thing is that none of this is inevitable. The same forces that brought us here can be countered if we understand how they work and what to do about them. And that's what The Echo Machine is all about. Some say that without corporate media backing, books like this can't succeed. I think we can prove them wrong. You can get The Echo Machine right now at davidpakman.com/echo on Amazon, Barnes & Noble, Audible, Kindle, or by calling any local bookstore and asking them to order it. This book is more important than ever. If you care about what happens next, and I do, check out The Echo Machine today at davidpakman.com/echo.